right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Our Pink Crypto Wanderer 5813 and Time Attack. Much love to you guys. Thank you so much for being here. Thank you for modding for me. And Crypto Wanderer, thank you for the kind comment, man. I appreciate it. Please do hit the like button, guys, on your way in, or if you get any sort of insight into the market from this live stream, please hit the like button. Share the live stream with me and for me, and subscribe to the channel. Lil Rick 69, Seer Germ, what's up, guys? Good to see you in here. Monty, good to see you as well. The show is starting. Wayne Rosi, much love. Hope all is well, man. Any viable entries to get into a short? Well, we had a short that I actually missed earlier today. We are rejecting from our 786 Fibonacci, and also if we look at our small sideways, that buying exhaustion range, you can see we hit the value area high of that range. After yesterday, we were looking at this pump. There was actually some bearish CVD in this little bit that I was showing during yesterday's video, but we did end up flipping that POC to support. And then we worked our way up to the value area high. So if you missed the short from the rejection of the 786, kind of like once you lost the 786, you could have shorted your stop above that high. And then really, we could still be targeting taking out the lows from yesterday or from Tuesday. But you could have taken a TP1 at the point of control. There was many things we could have done, and we might still be able to get into this short. I'll explain that in just a second here. Puria Beat, what's up, man? Welcome in. Eric, Ryzen 93, Alex, Young DNF, welcome in, guys. Bitcoin is a fraud. I don't think Bitcoin's a fraud, but man, Bitcoin has been boring lately, huh, guys, for trading. Like, we're not really seeing, we had the really good short opportunity up at 67K. I wanted to see us grab liquidity at 67,255 before seeing this move down, but it's not looking good for the bulls here, guys. It is really not looking good for the bulls. Now, we have a couple scenarios we could be looking at, and let me just zoom out to the 2-hour time frame. From the highs at 67K, we do have a sort of a really wonky, but we do have a 3-wave corrective bearish structure, and we are rejecting from very, very important trend volume resistance, which is our anchored VWAP. There was also a naked weekly point of control right up there. Now, from those highs, we have a nice little impulsive move down, a corrective move up, another impulsive move down, and what looks to be a corrective move up still, and we are still making lower highs. So we could be looking at this as a double 1-2 impulse to the downside, because if this correction is done with, then you expect impulsive price action to the downside, and you really are expecting to take out 57K. It doesn't mean that it has to happen right away, and you won't see bounces along the way, but that is your overall bearish scenarios, that we are going to see a crash to the downside. Now, because we have overlap between the lows of your wave 1 and the highs of your wave 2s, you have to classify this as a double 1-2 impulse, or it could even turn into a multiple 1-2 impulse. I talked about this a little bit in yesterday's video, but in yesterday's video, all of this price action wasn't quite made yet. So I was looking at a smaller 3-wave corrective move up, and that's where we rejected from that lower high golden pocket. If we pull that golden pocket from the highs of your secondary wave 1 to the lows of your secondary wave 1, you turn on that golden pocket, and you can see that is where we rejected. That was also the top of our descending channel. And if we look at our smaller buying exhaustion channel, that was the midline of our buying exhaustion channel. Now, there is a couple interesting developments, though. You can see that after seeing a move down towards our golden pocket, again, guys, we just keep trading these little golden pockets, right? Little golden pocket in here. After seeing a bounce from your golden pocket and your anchored VWAP, which this is the anchored VWAP from the lows at 57.7, we broke to new highs locally. But we still have to be aware that this could be just a larger 3-wave corrective move where it's going to be done with, and then you see your big dump to the downside. So the key right now for Bitcoin is to maintain above the breakout. You can see from our smaller buying exhaustion channel, that's this blue rising channel in here. We are breaking above the channel midline, and we're trying to hold it as support. Yes, we did reject from the value area high in the 786, but we're trying to hold it as support. And we've been kind of chopping in here for a few hours now, where actually, 6-8 hours here, where we're trying to also flip our anchored VWAP from the highs, from our 67K highs, into support. Now, there are times where you get a little bit of chop around the anchored VWAP, and overall the trend does continue to the downside. So that is why I am not super bullish yet on Bitcoin, chopping around this anchored VWAP, because we could chop for a bit, and then if we kind of dump back inside, and if we lose our VWAP for today, you can see the VWAP is pretty much our daily VWAP. The darker blue line is right around our larger descending channel top. So if we can hold here and hold this relative zone, we might be able to make another new high. And then we can start talking about some bullish scenarios for Bitcoin if we can pop up to make one more high. But from yesterday's lows, from those lows, Tuesday's lows, excuse me, from Tuesday's lows, we do have kind of a zigzag correction to the upside, and it looks to be somewhat of a WXY correction because we have kind of this impulse up, this corrective move, and an impulse up. So that's clearly a three-wave move to the upside right there. Then we kind of have this three-wave move to the downside here, and then we're looking at another three-wave move to the upside. So that's a WXY correction, a series of three-wave moves, but it just makes a bigger zigzag correction to the upside. And if that is the case, then you would expect to start seeing that momentum come into the downside, and you would expect to take out the lows of your local correction, but also it would mean that this is more likely, this overall structure from 67K is more likely to be a bearish structure, and we're about to see a much bigger collapse to the downside. Now, in the bullish case scenario, let's say that, we were bouncing from the value area low of our range. It was also the bottom of our channel, of our buying exhaustion channel. And now that we're breaking above the midline of that buying exhaustion channel and breaking out of the larger descending channel, there is a bullish chance here. The bulls still do have a chance. The bulls would have to see this, though, as a, because this starts with a three-wave corrective move, which is not the most bullish. And generally, you want to start with an impulse. And could we try to force an impulse in here, like maybe a 1? All of this has to be a running flat and a 2, maybe a 3, a very small 4, and then a 5. You can kind of force that. It doesn't look the best to me, to be honest. It's far more likely, if you don't force it, that it's a three-wave corrective move. And if this starts out as a three-wave corrective move, that means you're just merging into a larger three-wave corrective move. So for the bears, they look like they're in control. The bulls are not looking very sharp right now. And yeah, I would expect, like, very, very locally, Wayne Neurosi, we could look at, if we pull from the highs from earlier today to those lows just bouncing right now, we already did hit the golden pocket. You can see that golden pocket in there. We already hit it. And that's where we started to see a pullback a couple hours ago. But the midline is trying to hold. If we come up to that golden pocket 786 zone again, we might be able to take a short off the SFP of that candle from a couple hours ago, because you would be expecting, after this WXY correction ends, you would be expecting something like a 1, 2, and then you'd get your kind of bigger momentum to the downside, a 3, 4, 5. That would take out this low, and that could just be the start of your wave 3, your larger wave 3 to the downside. And we'll try to keep an eye on that throughout the live stream here, because I am wanting to get into some trades too, guys. It's been a couple days even since I've really taken a trade on Bitcoin, and we're here to trade. We're here to make money here. And so if we have to kind of play scalp for now, then we'll play scalps for now. On the 15-minute chart, we could be looking at some sort of triangle that's forming in here as well. And triangles do often form in wave 4s and wave 4s corrections. So from this low here, you could say it's a 1, 2, 1, 2. This is your big third wave. And then you'd be in a 4. You'd expect a 5, and then another 4 and another 5. And that would be bullish, right? That would make this structure up an impulse. And then because of that, we would have to come in here and we would have to try to force an impulse in this move here. But it's a valid scenario still, because there's no overlap between these highs and this low here. So we'll kind of keep an eye on that. It's all going to be depending on our local price action here. Now, our pink, what does CVD look like? CVD is pretty neutral right now. If we're looking here on CVD, we are seeing a lot of long step in let me grab my pin here. You can see we are seeing a lot of long stepping in this zone. Our CVD is increasing overall here, so that means long positions are stepping in. And if we look, a majority of those long positions are new long positions because our open interest is increasing. So the bulls are at least trying to fight here. They're trying to fight. But we have to remember, we're back inside of the value area high of both of our ranges. So we're back inside the value area high. Let me zoom out to our 1 hour chart again of our local buying exhaustion channel range. And if we look at our 2 month long range, we're back inside the value area high of that 2 month long range as well, which is the same exact value area high and the same exact point of control. It's just the value area low is higher on this buying exhaustion range. So the big thing is, if we do reject here, you would expect these POCs aren't really being well respected. There's a lot of chop in and around the POC, and when you see that, it becomes kind of less important. But if we do come down there again, you would want that to hold, and then you would want to see some more movements to the upside. And in that case, we would be looking at, a multiple 1 2 1 2 1 2 1 2, and then you would look for a 3 up. All right. But yeah, CVD here, CVD open interest. There's not a whole lot happening. If our open interest continues to increase here, and we do see that CVD push above our local highs. Actually, you can see the local highs, CVD. In some ways, the CVD is already up above that. Now, it's not the cleanest looking bearish absorption here. So let me grab our vertical line. You can see if I put it on the highs here, this is where your CVD was when you hit those highs. So technically, our CVD is higher than, and we are making lower highs here. And it's more of a flat open interest. It's not an increase in open interest because your open interest was higher there. But it could be a wonky form of bearish CVD divergence, not bearish CVD absorption, but bearish CVD divergences. All right, Olga, welcome in. Good afternoon. Yeah, we'll look at the NAS 100. We'll look at some altcoins as well, guys, if you want to. Bassinator TV, what's up, man? Welcome in from South Africa. Thank you so much for being here. Hansen, I think that's Ryan. Good afternoon, Ryan Hansen. Hassan. No, welcome in. Good to see you as well. I think you're also in South Africa. Mr. Rekichan, much love to you, man. Glad to see you here as well. I have Market Cipher B, but I am not yet confident using it for intraday trading. Could you please tell me a reliable intraday strategy on Market Cipher B? Yeah, I can show you. So really with Market Cipher B, because it is slower than NAMI, and if you're talking about intraday, you're probably talking about scalp trading. So you want to really look at that 15-minute and under time frame. But it's pretty much the same thing. Now, money flow is going to be super important on those lower time frames. But knowing that you're looking at intraday trading, you still have to pay attention to some of those intermediate time frames. Because like right now, you can see on the 15-minute, our money flow looks pretty good right now. Money flow is rising rapidly. You don't have any bear divs. Now, we could be making some bear divs. If we make another high, you would see we would have higher highs in the price action. We would have lower highs in the momentum waves. But generally on the 15-minute and under, you want to see multiple drives of 15-minute bear div. So you have 1, 2, and then maybe a third drive there. And then your money flow, you want it to be topping out and starting to roll down already. And when you see those multiple bull divs or bear divs, excuse me, with money flow draining and you're hitting into an actual resistance level, if you start to see this in the middle of nowhere, you could try to take a little scalp short, but it's better when you're actually rejecting from a resistance level. Now, also, if you're looking at intraday scalp trading, you can use an indicator. It's called MTF levels, and you can turn this on. It will show you all those, like the previous week open, the weekly open, daily VWAP, weekly VWAP, all these open levels, because these do tend to give reactions for scalps. Like if you come up here, you make one more high into the previous week open and the weekly open, then you might see that bearish divergence play out into that resistance. But you want to look at your Market Cipher B to make sure that your money flow is probably the most important thing to be looking at. So you can, it's going to be a multiple time frame type of thing. You want to see your money flow. 15-minute is pretty good to look at the money flow. The 1 hour time frame was going to be important. So if we go to the 1 hour right now, you can see the 1 hour already has started to roll over here. So now that is telling us that, okay, this triangle could break down because money flows rolling over, and we did reject from resistance, the 786 and the value area high. But if we zoom in on the 15-minute chart, you're like, wait a second, the 15-minute chart, money flow still looks very somewhat bullish here. It's rising up rapidly. Green dot just happened. So we want to be patient and wait. We want to be patient and wait until maybe we come up and hit this local 786, or you could even, with intraday trading, you know, you could pull a very mini scalp range of this consolidation. And I guess, yeah, value area high is a little bit lower. I don't know. I would be cautious with super small volume profiles like this unless you have confluence with a value area high at like a Fibonacci level. Another thing you can look at with Market Cipher B is you can look at the stochastic RSI and the RSI. You can see these two lines here. Now, when those two lines come together and merge into one in the oversold area, generally towards the top of this dotted bar up here, you can see when they come together like this and you're into resistance, you generally will see them. That's kind of a topping formation. Look at this high here. They come together. They come into one. You get that move down. You look over here when they start coming together, coming into one at the oversold region, you get a little mini high. You see a little move down. So that's another strategy you can use. What I would be looking at is if you have those two lines coming up into the oversold kind of merging into one, and then you also have bear divs locally, maybe you can look at the 15-minute for these merging lines, and then you can come into the 5-minute, and if you see bear divs on the 5-minute as those lines are merging together in that oversold, that's when you can look for kind of like a scalp short to the downside, an intraday short position. But the thing is with intraday trading like that, you cannot be greedy, right? You can't take an intraday scalp short and then, oh, it's going to dump to 61K, so I'm not going to take profit till 61K. If you're shorting, like in, for instance, today's move, we came up to the 786. You can see the value area high was very, very close, like, you know, just what, 20, 30 bucks away. You pierced above that 786 and then you started to lose it. So what you would want to do is you'd want to enter the short once you start to lose the 786, almost playing it like an SFP level, right? And then your stop would go, I would probably put it right above the value area high. And the first level I would be targeting would be the back test of the channel midline, which is already a 4 to 1 risk to reward ratio, or even you could look at back testing kind of that VWAP area or the bigger channel, which is what we did. You can see we came down here, we back test that. That is still a decent risk to reward ratio. And as long as you're taking proper risk management, even on these super, super small moves like this, you can find trades. Actually, during this live stream, since we're looking at like intraday low time frame scalping, kind of mega low time frame scalping, we can look at, if we do see a drop here, come down and bounce from the VWAP again, maybe grab liquidity from this low and bounce from the VWAP. We can even look at taking a long position. You know, your stop, you would wait for the bounce. So you wouldn't get in probably right away. You'd get in maybe $100, $200 higher. Your stop would go below wherever that wick low was. And then we could start targeting. I would even target these internal lower highs here for a TP1. That's still going to give you a really good risk to reward ratio. And I would leave some of it open to target the daily highs and maybe actually hit the value area high. Let's go zoom out here just a little bit to the 4-hour time frame. So I know this chart is looking a little bit messy. Let me take off this buying exhaustion channel for just a second. What is interesting for me here is we could see something very similar to what we saw over the weekend, where we had a lot of chop around the anchored VWAP, and you can see all these wicks to the upside above it. Those are signs of sell-offs, right? You're seeing the markets selling off at when it's trying to break above. So that's a little bit of a bearish sign. Now, we're seeing the same exact thing right now with at least this last 4-hour red candle that we had right in here. But we're not seeing a clear rejection yet. And you kind of want to see that big bearish engulfing candle, and then on that little bit of a rise up, you can get that, you can take the short there, and then you see that's when that kind of waterfall happens to the downside. If we can start to close 4-hour candles, like decently above the anchored VWAP, I do think there's a shot we could come up a little bit higher. I think there's a shot we could come up and grab the liquidity at 65.7, 65.8. And if we look at that golden pocket, if we pull a golden pocket from the highs at 67 to the lows that we made on Tuesday, and we look at that golden pocket, it is in that zone. And now that's a relatively, I mean, I would like it to be a little bit higher. So maybe you could even target the 786, which is a little bit above at 66K. Because you have liquidity here and you have liquidity here. So coming SFPing those into that 786 would probably be better. But we have a very confusing range in here. A lot of chop in here, which is relatively hard, harder to manage trades, right? As far as the Elliott waves go, we could be looking, the bullish scenario is that this is a 3-wave corrective move that's done and it's making a higher low. And then you do want to see those impulses come in here, right? You want to see an impulse. So what do we have to look at for that? Market structure. Remember, guys, market structure is king. So we have market, if we break this 65.7K high, 65.7, 65.8K high, that would be a bullish break in market structure. And it would make it more likely, not absolutely guaranteed, but it would make it more likely that this is a 3-wave corrective move down. And that now if we break that, it is likely that we could maybe see new highs above 67K, a push to the upside. But we also had an example of that yesterday, and it failed. So I want to show you that yesterday. And if you watched my video yesterday, I was explaining it yesterday. Within this move up from Tuesday's lows, we had kind of a low time frame impulse. We had a little bit of a corrective range and then another impulse. And so the key, in order to continue local bullish market structure, you did not want to break that kind of range low, that corrective range low right here. And yesterday during the FOMC and after the FOMC meeting, you can see we did break that low. Yes, it was only an SFP, but we broke the low. And because we did, we said, okay, now that this is more likely to be a confirmed 3-wave corrective move. Okay, it was a confirmed 3-wave corrective move, but you can still see we made a higher low and then we continued up to new highs. So in that case, the market structure failed us. The bearish break in market structure failed us there. Because if that was the case, you would have been looking for like a golden pocket retrace and then a dump. Would have been more likely. It's the more probable scenario, but not guaranteed all the time. So market structures is king. Market structure breaks do work a lot of the time, but not every time. All right, let me check the chat here. Where was I? Grabbed a short on ETH at 1924. We'll see how she rides. I plan to hold it all the way down to 1500-ish. Dang, 1924 down to 1500. That would be a really nice trade. The thing about Ethereum, Mr. Rekachun, is it's holding up a lot better than Bitcoin. Now, we still are in this buying exhaustion channel here, and we are potentially forming those bear divs, right? You have 4-hour bear divs here, and then we could be making another drive of 4-hour bear divs if we make another new high. The scary thing with Ethereum is we do have some really important resistance above us, and this could keep chopping, see a breakout, and then reject from that resistance, get reacceptance, and then see that big move to the downside. But overall, on market structure, on Ethereum, your market structure still looks pretty good from those lows. You can see it's just bullish, like higher highs, higher lows, all the way up to the top, higher highs and higher lows. So you haven't really had that big break in market structure yet in order to confirm that larger dump. But it does look pretty bad based off of this move being more likely to be a 3-wave corrective move. And if this was a 3-wave corrective move and then you come and take out the lows, that would have been fine. Then this could have been fine here to look at more of a larger impulse and a bigger break to the upside. But because we started with a 3-wave corrective move and we didn't take out the lows, the overall more macro bias has to be a bearish bias. Now, that doesn't mean that you can't come up a little bit more on Ethereum to hit that golden pocket around 2K. 2K to 2100. But you're short from pretty much right where we're at right now, okay? Let's pull a Fibonacci golden pocket from that most current high on Sunday down to the lows that we made on Tuesday, and we are in that golden pocket rejection area. I see why you're shorting that general area is because it's our lower high golden pocket. The one thing I would be concerned about here, once again, is that you still haven't had that big break of market structure. Higher high, higher low, higher high, higher low, higher high, higher low. So this could break up to make a higher high. Now, if there is an area to reject, a golden pocket's a great area. Another thing we can look at is we can pull a volume profile of that kind of range there. You can see that your value area high is just above, and we're at the POC right now. And the POC has been giving us resistance for a couple days now, actually pretty much for majority of the week. You can see rejection, 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 rejection. And if we break above this POC and really start to close 4-hour candles above the POC, you probably are going to make new local highs. Because you can see we have no 4-hour candle closes above the POC. So this in 29 minutes, if this candle closes above 1924, pretty much, I would expect continuation at least up to the value area high at 1942. But also, if we break above the value, the point of control here, you have to maintain the overall bias is based off market structure, that you could make new local highs above 1979, or this high at 1979, and come up to hit that 2042 golden pocket, 2074, and then your naked monthly is probably your most important level at 2116 there. Let's go to the daily time frame. Do we have any dailies? Let's see. That daily looks like, let me mark that and see if that has... All right, you do have a fresh daily at 2019. You can see it was not actually tapped. It's this daily level here, and it was not tapped with this next candle. You do have a pretty big imbalance that was created in this area. Now, we filled the fair value gap because the fair value gap just goes from the bottom of this wick to the bottom of, or to the top of this wick. So we filled that fair value gap that was created. Actually, I think once we filled it, you can see once we filled it here, we made that move down. You do have another daily level at 2110, really 2111, closer to 2111, and that's going to be right on top of that naked monthly point of control. I just want to double check on that naked monthly to make sure it is fresh. Yeah, you do have a fresh naked monthly point of control there, right above the daily at 2110. And then if we look at our golden pocket there, we pull that golden pocket from the highs at 2466 down to the lows, your non-logarithmic golden pocket is going to be right on that naked monthly. So like 2100 actually is looking pretty good for a short there on Ethereum. But you can see that is more than a 30% dump to the downside, I believe. Let me double check that. It is a 39% dump to the downside. So with that 39% dump to the downside, you should be taking your golden pocket and turning it based off log scale, and that's going to shift your golden pocket down to that 2042 to 2074. So when you do that, you can see that you also have confluence with your previous range point of control there, right inside of that zone. That's why this is kind of a big zone for Ethereum, but it is the zone to be watching, and you have to pay attention to kind of all of these little levels in there. Now, what you want to see as you're coming up into this resistance is you want to continue to see bearish divergences form on all this inside of this exhaustion that we're seeing. If we keep making higher highs and higher lows coming up into here, you want to start to see multiple drives of bear div forming between these highs. And then if you see that as you're coming up into this resistance, that's when you could take the big short. And I'm personally looking for the short in this general area as well. Actually, I don't think I have an alert set on this golden pocket yet, so we'll set an alert on the golden pocket. We can also set an alert on that daily level, and if we get that, that would be a nice kind of swing trade short that we could be looking at. Because if you look on the daily level, on the daily time frame, we are potentially forming some bear divs on the daily time frame on Market Cipher and on NAMI. You can see as we're starting this buying exhaustion channel, we have those higher highs. At least from the high on Tuesday, July 21st, we do have lower highs here. Money flow still looks relatively bullish, but you can see it's maybe going to start to curve over here. Now, if we close green today, it's not going to curve over, but that's why this might continue to develop bear divs. It might continue to make new local highs until we get up there, and then you might see something like this, and then this would, really start to be rolling over and coming out as you're coming into that purple box of resistance. That's for market cipher. Now for NAMI, we do have pretty significant bear divs already confirmed, and we also have the bear divs on money flow confirmed here. Very slight bear divs on money flow, but those are bear divs. You can see this is a higher, very slightly higher high. So more of equal highs. You might want to see another move to the upside and a lower high come in. That would give you a nicer bear div on the daily on NAMI there. But that's the way I'm kind of looking at it with Ethereum. And remember, my bias on Ethereum right now is for new lows to be made below those 1505 lows, just based off this structure alone being a three-wave corrective structure. Okay, let's go into Bitcoin again. Yeah, now Bitcoin is not seeing any bear divs on the daily time frame from that high at 67K. And it's just, this is a really kind of confusing, choppy range that we've been seeing the past few weeks here, guys. Honestly, for me, I haven't taken much trades on Bitcoin because there's not a lot to look at. We had our big short at 67K. That was the start of our purple box of resistance. And there was a naked weekly point of control there as well. It's obviously not going to be naked anymore because we've hit it. But if you look here, you'll see that we had that naked weekly point of control. Let me zoom in on the hourly chart so you can get a better look at that. Wow, I don't know why it's shifted down there, but I promise you there was one up there. If you go look at the video right before, the day right before when we marked out this box, it was up there. All right, locally, very, very locally on Bitcoin, we're just consolidating and chopping, and this is generally, for me, this is not what you want to trade, especially when you're chopping through an anchored VWAP like this. This is really just noise in the market, right? Noise in the market. You're above local support, and you're above the VWAP. And remember, the VWAP is a trend-based volume level, right? Support or resistance level. In this case, because we're above it, it's going to be a support level. And then you're chopping around your trend-based volume resistance, and you have your volume resistance that you pretty much rejected from earlier today. So for me personally, I'm waiting for a decision to be made. I don't want to trade anything in this zone unless you're micro scalping, guys. If you're micro scalping this range, then pull the volume profile for that range, that super small range, and you can trade the levels, the volume levels within there, and you can also look at fib levels within here. And liquidity, of course. Liquidity levels within there. But for me, that's a little bit too degen for me, especially unless you really want to sit there and babysit the chart, and you have to make sure you're using good risk management there as well. All right. Sultan Sal 6961, welcome in, my friend. Of course, you're welcome for the alpha, man. Thank you for being here. ZMX, what's up? Thank you for being here. Thank you for modding. And Liberty and Trust, good to see you in here. Boomdock Saint, good afternoon to you. Why do you use stock RSI? Oh, stochastic RSI on Coinalyze. The stochastic RSI, I just look at it. Once again, it's kind of like looking at divergences, right? Bearish and bullish divergences. So stochastic RSI, you can still see those bear divs if they get bear divs and bull divs. And what I want to see is if I'm seeing bearish divergences on a high. Now, this is not the case. We didn't have bear divs there, but let's just say we had bear divs here at the highs. And then you now, after those highs, you start to see bearish CVD divergences or bearish CVD absorption. It can make it that absorption signal even more stronger. So that's why I have the stochastic RSI on, is to look at bearish and bullish divergences. What about the liquidity at 66,300? Let's see. Yeah, this kind of liquidity trail in here, you have 66,269, 66, 380-ish. It looks like 375. Well, that is going to be above your 786. Now, 886s are important levels, guys. The 886, I would be looking more at the 886 at 66,436. And in sideways ranges, which the buying exhaustion channel we're seeing is not quite a sideways range, but it is somewhat of a sideways range. And the 886 does give you rejections on these more sideways ranges like this. So if you came up there, you SFP'd 66,373 into that 886. By the time we get up there, this anchored VWAP also might be right around that level. And it would be like another back test of the anchored VWAP. You could look for a short from that, but you would be breaking market structure bullishly. So because of that, if you get a rejection from there, you would have to watch for the back test of the value area high because it might make you continue up there. Or you might not even see a reaction there because your major liquidity level is your 66.7. This 66.7 level is a far bigger liquidity. And actually, if we look at our liquidation heat map, let me go to the 2-week time frame, I think it was. Right above those 66,000. This is the $67,000 highs. Let me go to the 1 week. I believe it was there. Yeah. So at above 66,000, you can see right here, 65.5. That is that high at 65.5. We have some pretty big liquidity right above those highs. And that is, of course, this high right here at 66.7, 66.8. And there's kind of two liquidity levels because you had this little guy right here and you almost came up and grabbed it. If you remember when I was looking for the short from this golden pocket, I wanted to take that liquidity. So the reason why that liquidity trail, that liquidity pool expands a little bit higher than those highs is because you do have liquidity from this guy right here as well. Because anyone that shorted in this zone here, they're going to put their stops above that high. That's the technical stop loss for the trade, right? That's when you'll know market structure is breaking and you might be wrong. So we do have a lot of stops even above this high. They would still be in that short trade, or you also had a lot of people enter in this zone. Obviously, their stops are probably going to be above both these liquidity levels, and that's why that liquidity is coming up into about 66,000. Thank you, Alex. Great advice, he said. Thank you for that. Monty, weird, I see the name there for MTF levels, but can't seem to find it on TradingView when I search it. You might have to use the paid TradingView. If you just type in MTF key levels, MTF key levels, support and resistance, it might be a premium, or it might only be available on paid TradingView, but I'm not sure. I do pay for TradingView, so I couldn't tell you if it's not on the other one. But you have MTF order block finder, MTF break of structure. I like that key levels. And when you turn that on, MTF key levels, I actually have a lot of stuff turned off on it. You can even have way more turned on it. So if you go to the settings here, you can have the daily open, the daily high, the daily low, previous open, previous high, previous low, previous equilibrium. Weekly, same thing. Monthly, pretty much the same thing. You can turn on yearly levels. You can turn on your weekly VWAP as well. It'll show you where that weekly VWAP is. Monthly VWAP. There's a lot on here that you can use. And for scalpers, it's a pretty good kind of indicator to use to kind of get those scalping zones within a day trade, like within intraday trading, low time frame trading. And smaller moves, right? Because remember, it doesn't matter the size of the move. You could make more money off of a move where you're shorting the loss of the 786 and your stop is above that high, and say this rolls over and comes to take this low, right? Or if you're doing something like this where you shorted this lower high golden pocket up here, your stop is above the 67K high and you're targeting 60K or 61K. You can see this is only a 4-to-1 risk to reward ratio. You shorted up here. You're waiting for it to come all the way down here, but it's only a 4-to-1 risk to reward ratio. This small trade is way bigger. It's a 15-to-1 risk to reward ratio. It's all based off your stop loss and your risk to reward ratio. So it doesn't matter the size of the move, because obviously this move here is a much larger move than this move here, but you're going to make far more money off of this trade because your stop loss is tighter. And because your stop loss is tighter, you can use a bigger position size. Remember, guys, with trading, everything is based off of your stop loss, right? And you want to have a plan before any trade setup. If you're taking trades without a proper trading setup and plan in place, then in some ways you're gambling. But like, for instance, we knew that this was there was a likelihood that this was an expanding diagonal to the downside, an impulsive move to the downside. Also, if you just look at it, it looks a bit impulsive, right? So we were looking for a corrective move, and if you come up correction, where's the most common area to reject? The golden pocket. So you could be pulling that golden pocket for a potential rejection. And if you come up there and you start to reject from that golden pocket, your key, if you shorted, let's say you shorted once you started to lose the golden pocket, your stop goes above the highs. And the first TP for me would be taking out that low, right? This low right here. And that's a 9.9 risk to reward ratio on just a small move down. And the way, so say that was our trading plan, right? You can see here, boom, your trading plan played out. You won that trade if you took it. You would have had a calculated risk to reward that's greater than 3. And remember, you can lose 70% of your trades and you can only win 30% of your trades. But as long as you're taking a risk to reward ratio of 1 to 3, you'll still be profitable, even losing 70% of your trades. Now, obviously, that's a much greater risk to reward ratio than a 1 to 3. It's almost a 10 to 1 risk to reward ratio. So you can look for a TP1, right? Say you were going to reject from this golden pocket, and then you were starting to bounce from this channel or even bounce from the value area high. You could pull enough out to cover your fees, to cover your stop loss, and then let the rest run. And then it's still a win. Maybe it's not as big as if you left the whole trade open down to that level, but that's the way we look at trading. And so when the market gets really, really boring like this, in some ways we're forced to look at some of these smaller trade setups, some of these tighter trade setups, which in some ways can be very, very profitable because let's say you did short the value area high 786 tap here, your stop is right above that high. Let's say this does see the big breakdown. You know, you pull out some of it, you let this thing run, but because your stop loss was so tight, you have a big position size. Even if you pull out 50% at this low here, you're still in a super massive win because you're looking at low time frame trades. But the probability to get stopped out is also a lot greater because you have less kind of breathing room for your stop loss. So it all depends on your guys' style of trading, right? And depends on what you're comfortable with, what kind of stop loss you're comfortable with, as far as like if a $100 move is going to stop you out, you got to be comfortable with that. All right, let me get this chart's starting to get messy here. Okay, where was I here? Sudeep, welcome in. Much love to you. I just lost where I was in the chat. Okay, here we go. Thanks, well explained. Crypto Clan World, much love to you, man. Scalping ETH long today again. Yeah, ETH does look like it has momentum to the upside, right? ETH is continuing now. You're at a golden pocket. I would not be entering a scalp long here at the golden pocket because you can see you had that rejection just a couple hours ago from the golden pocket. You are maintaining, though. You are maintaining above the VWAP here. Look at VWAP, bounce, 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 bounce. I mean, as long as you're kind of maintaining this for a scalp, let's see if we're rejecting from a very micro golden pocket. And it looks like we are rejecting from a very micro golden pocket here. Yeah, I guess you could scalp short this to take out these lows right below the VWAP. So here's a good example of scalp trading, guys. You're starting to reject this here. Now, obviously, we're getting in a little bit late. Let's say you got in once you started to lose it. Let's just say right in this area. Your stop would go above that high. Even just looking to take out these lows right here, you're looking at a 3.5 to 1 risk to reward ratio there. And remember, you're basing your position size based off this stop loss. So for instance here, let me pull up my calculator. Let's just say we have a $1,000 account and we're risking 1% on this trade, right? So you're risking $10 because 1% of $1,000 is $10. That's not your position size, but that's what you're risking. If you get stopped out on this trade, you'll lose $10. So we're going to do $10 and we're going to divide it by this percentage or this number, but because it's a percentage, you have to move the decimal over. So we would do 0.00196. And I think I think I messed that up. $10 divided by 0.00196. You could put on $5,100 onto the trade, 5,102 onto the trade. And if you win, you're going to win, you know, $3.5 for every dollar you risk. And if you lose, you're going to only get stopped out and lose that 1%. In other words, $10. So now this is where also leverage comes into play, because you're going to say, wait a second, Divine Hood, you just told me that I only have $1,000 account. How am I supposed to risk $5,102? Well, this is where leverage is used as a tool for margin, right? To get you more margin, or to get you a bigger position size. So in this case, you would have to almost 6x use 6x leverage, right? You would be borrowing $5,000 from the exchange, and $1,000 would be your own money. And now you have $6,000 in your account because you're using 6x leverage. So then you could put 5,100 on this short. If it plays out, you win that trade. If you get stopped out, whether you're using 10x leverage, 6x leverage, or 100x leverage, it doesn't matter. You'll still lose, because as long as this position size is what you enter with, if you get stopped out, you'll only lose 1%. Doesn't matter the leverage. So I hope that makes sense to you guys. Honestly, risk management is probably the most key thing there is, guys. Wayne Rossi, thanks, Divine. There's not a daily level around 65,400. Let's check here. I think there is a daily level at 65,343. Yeah. And you can just mark that out by just going to your daily time frame, and where those candle closes and opens are together. What I like to do is I like to use my magnet. So you can see where this candle close and open is together and it hasn't been touched yet afterwards. That's a fresh naked daily level. This candle open and close are together, fresh naked daily candle. But what I would do here is I would grab my horizontal line, or you could grab a horizontal ray, and you use your magnet tool and you just let it snap on there. Oops, I just messed that up. You just go where it goes, snap it on, and then boom, you're right there. Now you can see that's at 341. My other one was at 343. So it might give you a couple dollars of a difference, or you could turn on super strong magnet, because I have it on weak magnet. You could turn it on strong magnet, and then you could kind of snap that into place there, you know, and there's your daily level, right? At the same time, look at this was a daily level until it was a daily level, right? It's been tapped now because we tapped it here, we tapped it here. But you can see this daily level has not been tapped yet. So it's a fresh daily level at 62,264. And that's the way you mark out daily levels. It's the same thing with weekly levels, by the way, guys. Weekly and monthly. You can come in onto the weekly time frame. Let me turn off our dailies. Let me get rid of this. And then you can just mark out your weekly levels. You can see we have a weekly level right up here at 82,172. We have a fresh weekly support level at 59,474. We have a weekly coming back here, 54,881. And then, you know, this weekly's been tapped, so I don't keep it on the chart anymore. We could, if we close a red candle this week, we could form a new weekly level here if it's a red candle close. What I don't like here on the weekly, by the way, guys, let me pull up Market Cipher full screen. You can see that your money flow is looking like it's wanting to curve back out again, and your momentum wave is looking like it wants to roll over again. This is really scary for Bitcoin. Now, what we could see is, obviously we're in this kind of exhaustion channel here. This is a daily exhaustion channel. If we do roll over and make another new low below 57.7, we come down to 56 or 54K, 56 to 55K. And this rolls over and creates an even tighter one. We would have the multiple drives, right? You would have your regional weekly bull div, and you would have your local weekly bull divs. And the reason why I am not super convinced that 57.7 is the low, well, first of all, it's based off this move to the upside being more corrective, more probable corrective. But look at, there was no bull divs on NAMI, and generally there was no regional bull divs on NAMI. And these major lows that we see on the weekly time frame, you generally will see bull divs on NAMI, and you will see bull divs on Market Cipher as well. But it's a weekly time frame, so it takes a while for those divs to form, right? You're not going to get a new weekly bull div in just 1 week. It takes weeks to months to even start to form those momentum waves. Yeah. Trade divergences. Yep. So CryptoClan World, you trade divergences as well with the stochastic RSI. Got in gold short because I was bored. Yeah, let's look at gold. We'll look at some of these altcoins real quick, guide. Altcoins and what was that? The NAS 100. You got into a gold short because you were bored. Well, gold right now is flipping this daily midline. This is a channel midline. It actually is breaking above the midline and trying to flip it to support right now. You do see slight bear divs on NAMI, but not on Market Cipher. Money flow looks relatively good, but once again, it is starting to look like it wants to curve out here on the 2 hour. And yeah, I would say trade this small range that we looked at last time, this small sideways range. You're above the value area high, and you can see you broke out of the value area high, you back tested it, and you're holding not only the value area high, but your midline. So a short is a little bit risky here, but I see probably why you got into the short. You probably got into the short because it was an SFP of this high, or maybe even an SFP of this high. Yeah, an SFP of that internal high there. So what I personally would be waiting for on gold is now that we've SFP'd that high, if we fall back inside the volume profile again, I would take the short. So you would look for wait to find reacceptance. If you find reacceptance, your stop would go above your highs. And then I would be targeting this low down here because it would make that likely that this is a corrective move. And so you would target that low. So then we would pull that and see if it's worth it. Is it worth it? It's a 3-to-1 risk to reward ratio. So yes, it would be worth it, right? 3-to-1 risk to reward ratio. Let's talk about gold though on a little bit of a larger time frame. This here looks impulsive. It looks pretty impulsive, followed by a 3-wave corrective move down, and it made a higher low. It was probably right around your 786. So let's pull that 786. Yeah, pretty much right around your 786 you bounced, okay? After bouncing, you came up to value area high, you rejected, you come down to POC, you bounce, and you're now trying to break out of the value area high again. So locally, I have to say locally, my bias on gold would be for more upside, honestly. I get why you're taking the short there, Peoria Beat, and if it's a super small scalp short, you could look to even take some profit on the back test of this value area high at 4,092 or closer to 4,093, let's say. But you have to be aware because this larger move here looked corrective. This could be, you know, a 1-2, and this could keep going. This move could keep going to take out these highs up here. Let's talk about a possible trade setup on gold. Because we're breaking out of the value area high, if we come down and start to bounce from the value area high again, I would look for a potential long. I would wait till it bounces a little bit and probably reclaims the midline. So you wait until it bounces, you wait until it reclaims the midline. Your stop would go below wherever that wick was. And then I would be targeting at least this lower high right here, which would be about a 5.5 to 1 risk to reward ratio. And then you could leave some open to target this overall high in here, your range highs. But as far as the volume profile trading goes, you can see that we bounced from the value area low. After bouncing from the value area low, you broke some market structure bullishly. You took out this lower high, you took out this lower high, you took out this lower high. You made some bullish market structure breaks. So because of that, you could look for a higher low. Well, we got the corrective move into a higher low. Now we might look for a higher high just above this high. Let's go to the 4 hour. Let's look at this here. Actually, what looks like could be forming is some sort of triangle in here, guys. We have some sort of triangle forming, and this is all from losing the pitchfork midline. You can see this is where we lost the pitchfork midline, back tested the pitchfork midline, and now it looks like we're forming a triangle. Now, overall, we have to be aware, overall, triangles are consolidation continuation patterns, symmetrical triangles, right? And we did dump coming into this triangle. So there is a higher probability on macro timeframes of dumping coming out of the triangle. But what we see a lot with symmetrical triangles, and the market makers know this because retail trades patterns a lot, is you'll see a fake out to grab liquidity first, and then you get the dump. And if you want to see a perfect example of this, let's go to XRP, because XRP on the higher time frames, we saw that exact thing. Where's my XRP? triangle forming. You see the breakout just to grab the liquidity. You can see we had double top highs there. You break out, grab the liquidity, and then you continue the overall trend to the downside. So these triangles will often fake break up to grab that liquidity. And what happens at these triangles when you see that, all these breakout traders are trading the back test of the triangle because you see the initial breakout. Oh, we're breaking out. Now if it comes back down and back test it, I'm going to long, I'm going to enter long, I'm going to breakout trade, I'm going to breakout trade. All these longs enter right here, you know, and their stop is above this high. Or excuse me, they're targeting that high. They're targeting this high for at least the TP1, right? Their stop would be below this low here. And it breaks up just to take liquidity, and then the overall trend continues. So not only did you grab liquidity and stop out the short trades from here, but you also have new long trades that entered here that are trapped here, and that causes that fuel to the downside. And so we could be looking for something like that on gold, to be honest with you. We're seeing on gold here kind of the same type of thing happening. And so very locally, though, that means you might see more upside. Very locally, you might see more upside here because you have impulse correction, and then you would need another impulse here. And the target would be to take out that high. As soon as you take out that high, you could see the roll over and come down. We could also pull a trend-based Fibonacci extinction here. We go something like this, and look at the 1-to-1. Actually, that is very, very nice. I'm going to set an alert here because if you see this high is right into your 1-to-1 at 4,200, and let's just do that. If we get the SFP into the 1-to-1 or even the 1.236 aligning with your pitchfork midline, it would be nice. It would be a nice fake out, right? You break out all these people long the breakout just to come into here and then see that continuation down. And one of the reasons why I'm looking for continuation down on gold is we have a very key liquidity low down here. We're also chopping. Let's zoom out on gold here even a little bit more. Let's go to our daily time frame. On gold, we are forming a corrective channel. This corrective channel in here. You can see for a majority of it, bounce from the midline, lower high, bounce from the midline, lower high. The second we lost it, it flipped into resistance, flipped into resistance, flipped into resistance. And now we're, you know, depending on what happens here, we could be seeing that continued rejection from the midline. We're actually very, very locally flipping it to support. So it looks like there could be more upside because this is the first time in quite a while we're flipping it to support. And because of that, we might continue up here. We might continue to take this high at 4166 or the high at 4200. I forgot to check while we were on the daily. Let's look at, yeah, and here's the thing. Money flow's coming up on the daily time frame. You have a daily green dot here. Now it's not bull divs down here. Actually, you did have bull divs between this low and this low here. You can see bull divs forming, followed by a nice trigger wave here. Money flow starting to curve up. That could give you the fake out, right? Even in a larger downtrend, that could at least give you the fake out to grab that liquidity before coming back down. Gold actually looks pretty decent for continuation up here. Let me do this. We'll put that on the chart. 4166. Money flow looks really strong here. Man, if we let's just do a little scalp opportunity right now. Now, I'm not saying I'm taking this trade, but let's say we enter right now, we put our stops below these channel midline lows. And I would be targeting at first, let's pull our 786 Fibonacci. So I would even be targeting a TP1 at the 786 just because you could reject from that 786. That is, oh, that's not, never mind. I would not take that trade. We missed it. You needed to take it more down here. But let's say you are targeting that liquidity there. That's almost a 3-to-1 risk to reward ratio to continue up to grab the liquidity at 4166. Now, if we make another little move down here, we could look for that long from this midline, and then the stop, depending on how tight your stop loss is, it would be worth it to take some profit, you know, it would be something like this, like where you enter here, your stop is going to go below all those little lows. And even coming to the 786 would be a TP1 3.76. You would leave some open to take those highs there. But let's look at some other things here. We'll see if we can't get any good scalp trades. Right now on Bitcoin, Bitcoin is too choppy for me, and it's right in the middle of an anchored VWAP. I really am not too interested. You had a short trade off the 786, the SFP of the 786 earlier today, which I missed. I was not watching. I missed it, so don't think I got into that. But because you're also bouncing from the backtest of your channel, look at resistance, reject, resistance, reject, resistance, reject. Every time you rejected, you made a new local low. You reject here, new local low. Reject again, new local low. Reject again, new local low. Now that we're flipping it into support, we now should expect a new local high above the high from earlier today. And just quite honestly, this does look like a triangle, right? Something like this. You have your little mini triangle that's kind of forming in here. I don't like the chop around this anchored VWAP, because if we were like nicely flipping it to support, like this right here, then you could expect a new local high, and that you could have taken a scalp long off of. Here with the amount of chop in and through it right now, I'm waiting for this triangle to resolve itself in order to look for even a scalp trade on Bitcoin. But what I will say is, look at the money flow. It looks pretty good here, guys, and it's about to cross back up into the to the green on NAMI as well. So, and then if we look at all right, you saw how we saw that big candle wick just now? You're starting to see a little bit of a dump in open interest. So we're starting to get a little bit of a short squeeze right now. And that's why your CVD is going up here, is it's shorts getting stopped out, which is a market buy, but we know that it's not new longs coming in because your open interest is dropping here for the past half an hour. All right. BTC missed my value area high entry short. Yeah, man, I missed that short too. Joey Jordan, thank you so much for the comment, man. I appreciate it, and welcome in. Guys, really quickly here, I do want to take a second to shout out the partners of the channel. And I know this is annoying for you guys every stream, but I have to do this. So the main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on your trading fees, and you can earn up to 40% discounts on those trading fees if you deposit some larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses. Depending on the amount of volume you trade in the markets over a month period, you can earn up to $8,100. And that is on the USDT contracts market, derivatives market. So it's not only Bitcoin, but it's all the altcoins as well. Or even gold, like XAU USDT, trading gold. It's depending on the amount of volume, you can earn a bunch of extra rewards. And in my opinion, that's a great incentive to trade on the exchange. They're also giving some of the best initial deposit bonuses in the entire industry. If you deposit $100, they'll give you a 50% deposit bonus, which is over double what most exchanges will give you on a $100 deposit. They're giving you 20% deposit bonuses up to a $1,000 deposit, and 10% deposit bonuses up to a $20,000 deposit, which is also double. Most exchanges will give you, if you deposit 10K, they'll give you a K, but they won't do the 20K for 2K thing. So that's available for you guys. You do need to KYC level 1 in order to qualify for the initial sign-up bonuses, but they're there for you, and it's a great incentive to try to get on the platform. I've also partnered with BYDFI to create that Telegram community. It's a private community, but it's free. And in this Telegram community, I try to keep you guys updated throughout the day on not only on Bitcoin, but if any of the alerts that we set during these live streams go off on any of the altcoins or gold or anything like that, I will let you guys know. I try to give you my trades that I'm entering, trade setups that I'm looking at on Bitcoin and altcoins. So if you're interested in joining the Telegram, all you have to do is join BYDFI using my affiliate link in the description and deposit a minimum deposit of $100 or more into the exchange. That is your money. You're not paying it to me. You're not paying it to BYDFI. It's your money to trade with on the exchange. Now, once you've done that, you click the Telegram link in the description of this video. And in that Telegram verify channel, you're going to type in /verify and then your user ID for BYDFI. And it's probably going to be a string of letters and numbers for you guys. But /verify and your user ID, and that'll get you into the Telegram. And once you're in, you're in. I have 3 other exchanges, Blowfin, MEXC, and Bybit. Links are in the description if you guys want to sign up with those. It is a way to support the channel. It's a way to say thank you. You can also just hit the like button and share the videos. And then lastly, I have NAMI trading, which is this momentum and money flow indicator you see at the bottom of your screen here. And I use this for confirmations to enter and exit trades. For instance, as we were coming up into this 786 and value area high, you can see the bear divs that were forming on NAMI. So as we were coming up into resistance, not in the middle of nowhere, but once we hit resistance, you have bear divs, you had your money flow draining out, and that right there would have been at least enough for a low time frame scalp short trade there. And since I've been using NAMI for confirmations to enter and exit trades, my profit margins have gone up quite a bit because it gets you into the trades that are more likely to play out, but it also keeps you out of the bad trades that don't have proper confirmation, and you might get a TP1 and they get stopped out. Or lose the trade. So I've partnered with NAMI to get you guys 50% off. If you want, just use discount code DIVINE50 when you're checking out on the website. You have to click the link in the description of the video. And then they also are running a special right now for the monthly subscription. If you use DIVINE25, you can get 25% off. Yeah, Jason's got some really good videos on Market Cypher for scalping, low time frame scalping. I think he's got what's called the 5-second course. Now, I was very active in Jason's Discord for years, and that same 5-second scalp strategy he was using, I used it on the 15-second scalp, 15-second time frame, and I actually got really, really good results using it on the 15-second time frame. I showed it to Jason, and for a while, Jason was using the 15-second strategy instead of the 5-second. But pretty much you're looking for those like kind of multiple drives of bear div and money flow coming out, and then you're looking for it to actually hit a resistance level. Like in this point, you'd go pull a Fibonacci from here to here. That's probably your golden pocket right there. You have the bear divs, you have the multiple drives of bear div. You take this low time frame short, right? And it's scalping, guys, so you have to make sure you're taking profit on lower time frames. What I will say right now about this on the 15-second, look at this, looks like a clear 3-wave corrective move. So it's likely that we're going to take out this low right now. Maybe not right now. It might bounce a little bit first, but it's likely that we're going to take out that low on the 15-second time frame, the 64,687 low. And once again, we're just kind of shopping around in this channel. You know, we just had another rejection from the highs of the channel there. I was looking at the 15-minute and looking at the candle body here and pulling it. Anchored VWAP, you're sitting on that anchored VWAP right now. All right. Divine, I've made 4 scalps in this micro volume profile all day. Nice, Alex. And are you doing well there? See, that's the thing. Like, guys, Alex is doing scalp trading because the market is so boring. So he's been busy and engaged all day. As long as your risk to reward management is proper, you can make more money off of this move right here than off of this entire move down here. It doesn't matter the size of the move. It matters about your risk, how tight your stop loss is and how your risk to reward ratio is. And you can literally make more money doing that, you know? So it's just more dangerous and you are going to get stopped out more. That is why it's absolutely crucial to use proper risk management when micro time frame scalping. All right, let me do this. I want to set an alert on this low because if we do SFP that low at 64,535 into the VWAP and then we break above, because remember, guys, this is a continuation consolidation pattern. So it's higher likelihood to break up actually because we came into it with a pump. So what we could see is once again that fake out by the market makers to grab liquidity and then see the continuation. All right, let me find what was that that I was going to look at. NAS 100. And Olga, sorry that that took so long there to get there. Daily time frame. Wow, nice big bullish engulfing candle on the daily. Look at this bullish engulfing candle here on the daily time frame. What I would say is this looks like a crazy parabolic liquidity trail. If this thing starts to squeeze, it could squeeze very aggressively. Very, very, very aggressively. Let me just take this, set that there. You have this nice parabolic trail here, right? All of this liquidity. So if this really starts to push here, let me just do this. It's easier. Now you're starting to break above it. If you can get back inside your volume profile. So let's pull a sideways volume profile here. If you can get back above 28,446, you're likely to squeeze up and squeeze a majority of this liquidity because it's stop losses, right? Anyone who shorted in this area puts their stop above this high. Anyone who shorted in this area puts their stop above this high. This area, the stop above this high. This area, stop above this high. And so on and so on. So, but let's talk in terms of Elliott waves. So you could see a massive short squeeze to make new highs, but we have a high. We have a lower low because you broke market structure by taking out this low. Then we created a lower high. Now, I will say this. If this is a wave one down, this is a very high retracement for a wave two. But this clearly looks starting to look like a wave three. So now we can pull a 0.5 Fibonacci, our wave four targets. So let's pull our wave four targets from the highs of wave three to the lows of wave three. You put on those wave four targets and look at that 382 right there. Guys, if you reject this local zone of resistance right in here, I would expect to make new lows. Okay, so that is going to be your potential wave four rejection, right? Because we'd be looking at this as a 1, 2, 3, 4, and then you would look for a 5, and you would look for probably some sort of contracting diagonal in here because you have overlap between these lows and your wave one lows and your wave four highs. On the other hand, I mean, like, this is just so squeezable. This is so squeezable to me. So if you hit the golden pocket for wave four, let's go to our golden pocket. If you hit the golden pocket at the point of control, you're probably going to see a little bit of a rejection, but it's going to invalidate it as an impulse. It's going to invalidate 1, 2. You could say it's a 1, 2, but that would mean your secondary 1 and 2 would be higher in time and price. So it would make it more likely that it's a 3-wave corrective move that's done with. You might get a push up here, a rejection just to backtest value area low, and then you would likely sweep it all quickly. In a wave 3, sweep it all quickly. So I also would look at potentially at a scalp short from your POC just down to your value area low if you get up there, and then you would be looking at 10 to 1 risk to reward ratio from there. But that's only if you can get back above your value area low. And this is on the daily time frame, so that short trade could take a week to play out or a few days to play out, right? Man, this thing is just so bullish overall, though. All right, what I want to do is I want to look at our most local pitchfork because we have a couple pitchforks we can look at. We can go from a swing low to swing high to swing low. We can look at our bigger pitchfork. That one, you would obviously be using an original pitchfork because this is actually, maybe not an original. You'd be looking at a modified skip. Let's go to our modified. All right, nicely respected, nicely respected. So on the macro pitchfork here, you're holding your midline, right? You had a big wick past it today, but it's holding. And if today's daily candle closes above that midline, at or above this midline, that's a pretty bullish sign because that's like a bullish hammer candle, right? On the weekly time frame. So you want to zoom into the daily and see if you close. Zoom into the daily and you want to see if you can close above that pitchfork midline, which is going to be about 28,132. But we can also look at a more local pitchfork and we can go from this low to our high to our higher low, and we're going to want to put it on a skiff pitchfork because your trend is starting to weaken. So you want to use the smallest or most horizontal pitchfork you can, right? So let me hide the bigger one. Lower one. All right, not much respect on that, actually. A little bit of respect. You can see how you were chopping in here. Boom, boom. And by the way, look at that was a triangle, guys. Oop. There's a nice little triangle you were seeing in here that ended up breaking down. Which sometimes they do, even though they're continuation consolidation patterns, sometimes they do break down. It was something kind of like, get out of here. It's not perfect because my magnet's not letting me. But yeah, something like that. So in other words, you'd be looking at an A, a triangle, and a B, and then this is your C. And after an ABC, you're looking to take out the highs. Money flow still looks pretty bearish on the daily time frame, but you did print that big green dot. And with this bullish engulfing candle, if it closes as a bullish engulfing candle, you could see at least a move up to that value area low, at least. But you might see a much, much bigger move up. Okay, we did ETH. Let's see here. Which other one was there? Let me just scroll down to the very bottom of the chat here, guys. French Toaster, welcome in. Everyone's talking about Uni today. Okay, we'll check Uniswap. Let's see. What you think about Uniswap? Good push today. Okay, we'll check Uniswap here. Higher time frame is better for any indicator. Overall, better data. Yeah, guys. Generally, the higher the time frame, the more important it is for the overall trend and everything. So, like, that's why when you have a naked monthly point of control, it's really important, right? And actually, we can look at monthly levels and weekly levels, naked monthly, and naked weekly points of control in this range here. Yeah, that point of control, guys, if you're scalping or if you're trading the NAS 100, that level at right around 29,400, 29,402, it's going to be a potentially good short because it's your golden pocket and it's a naked weekly point of control and a golden pocket. And also it could be coming up to this pitchfork band up here. So I would at least be looking for a scalp. And I know this is hard to see right now. Let me just throw this on real quick. Naked weekly. Turn that off. If you do make it up that high, I would be looking for a short from there, but I would take 100% profit once you hit the value area low. Because first off, you'd be breaking daily market structure bullishly by taking out these lower highs, but it would also highly likely confirm this to be a three-wave corrective move if you hit the golden pocket. But that's still a nice short. Like, imagine if you catch the short here. As soon as you lose the 618, you short, and you obviously reject from your naked weekly, you come down to your value area low. 5-to-1 risk to reward ratio there. Boom. And then I would be looking to flip long here, and I would be looking to take out your highs. 20-to-1 risk to reward ratio, or depending on how tight you get that in. Okay, Coinbase got clapped in earnings. That's right, Coinbase earnings. All right, I'll have to check those out. What about my parents? Okay, wait, let's see here. Yo, I'm late. Not quicker. It's good to see you, man. And welcome in, my friend. I need to shout out my parents. Shout out to my parents. Much love, mom and dad. Thank you guys so much for giving birth to me and for supporting me. Love you guys. S&P of the triple high at 65,450 would be nice. Yeah, 65,450 is about 65.7. You know, it's in that general zone. Oh, right in here, 65. It's really on Coinbase, it's closer to 65.7. But yeah, I see what you mean. This is that was a distribution range, guys. Tap 1, tap 2, tap 3, distribution, right? So if you do come up there and grab that liquidity, remember that liquidity is up there, right up in there. See that above those triple highs, 1, 2, 3 distribution range, right above all those highs is all that liquidity. So it is acting as a magnet that's going to want to pull you up there as well. Now, if we do come up and take out these highs, it's somewhat bullish for Bitcoin, guys. It is going to be somewhat bullish for Bitcoin. Man, is there any coin? Okay, we'll check Uniswap real quick here. But if we can get some scalp trades on smalls, well, first off, this looks kind of nice right now. This looks like a wagon here. Whether you want to call that a bull flag or whatever. Oh man, this looks really nice, guys. So look at, from this low, you have a multiple 1, 2 impulse. 1, 2, 1, 2, 1, 2, 3. And this could keep going. Then you get your 4 5s, 4 5s, 4 5s, and you get that buying exhaustion channel that comes in. So Uniswap locally looks good for more upside. Now let's zoom out here and see where we could look for resistance to find. And you're breaking out of your range. Okay, this looks very nice on Uniswap here. You're breaking out of this lower range. You saw the tap into the naked daily, the naked weekly, and the daily level right into here. And even this, man, okay, one thing concerning to me. 1, 2, I don't see anything else in here. Maybe we can zoom in on lower time frames and find a 4 in there. But like that does look impulsive, right? This looks impulsive here. But because off the naked eye, you can't really see a fourth wave. You see a 1, 2, 3. What I would be doing is pulling a trend-based Fibonacci extinction from the lows to those highs to the higher low. And yeah, you're at your resistance at the 1-to-1 to the 1.236. Now we have to be careful because it could be WXY in here, right? A 3-wave corrective move overall. We also have some liquidity from this range. You can see this liquidity from this sideways range in here that's just above us. I like the daily level. Let me make sure this is a fresh daily level. It's not. So let's get rid of that. Actually, let's mark out our weeklies first. But look at your larger weekly range. This range in here goes from 2022, May of 2022, all the way to January of 2026. So almost a 3.5, 4 year long range. You broke it down, and now we're coming up for the bearish back test. Okay, super, super important here. You're coming up to the value area low, which is going to be at around 4.65, let's say, 4.65. If you reject, but taking this liquidity and then reject from this value area low, you would ultimately expect to continue breaking down here. But on the weekly time frame, we've now have officially broken market structure bullishly on the weekly. We took out this lower high just today or just this week, right? So you broke that. You have bullish market structure break. You have very nice weekly bull divs. Multiple drives of weekly bull div here. Money flow crossing into the green. Money flow curving to the upside. This actually looks good for a pretty aggressive pump up on higher time frames. Now, once again, it all depends on what happens here. It all depends on what happens here. Right? And obviously you're not longing right now. You're directly into your 1-to-1. I was going to mark out weekly. So our next weekly, man, we don't have any fresh weeklies in here. All the way up to this weekly here. And let me just, this is old. We can get rid of this. And this is probably going to be old too. So we'll delete that. Let's go to our dailies again. All right. We have a daily level coming up right around that value area low. At 481. But look at this. We have to be careful here, guys. We really have to be careful at this 1-to-1 because of this being potentially a 3-wave corrective move. Now I'm going to zoom in now, and we're going to look on that move to see if we can't find a wave 4 in there. Because we have our push up, correction. I mean, guys, 1, 2, 1, 2. You have your big third wave here, but there's not any fourth wave correction in here. That makes it super scary unless this is a 1, 2, 3, 4, 5. But you can't do that. That is not possible in Elliott waves because your third wave is a hard rule in Elliott waves. Is your third wave cannot be the shortest wave. Well, this from here to here is longer than from here to here. So we cannot, it's a very high likelihood that this is a corrective move up, even though it ends with a big C wave that's impulsive, right? I know it looks crazy and you're saying, how Divine Hood, how the hell are you saying that's a corrective move? Well, you know, it has to be based off Elliott waves there. That means you're looking between the 1-to-1 and the 1.236 to reject. Now, that is your zone, right? This is your big zone to reject from, and it's quite a large zone in here. But I would be looking at the daily level into the 1.236 or the SFP. Remember, liquidity is the most important thing. This is a pretty sideways range right here that we're seeing. So liquidity of the range is probably the most important thing. Now, if we just SFP'd, did we SFP that high? No SFP that high. So that's a good sign. Weekly time frame, Uniswap looks really, really good for a bigger move to the upside. But I have to be careful here because of this first move up. Now, let's ignore, I know this is not good TA, but let's ignore, this does look impulsive, right? It's not according to Elliott waves, but it looks impulsive. So let's ignore that there's 3 waves in there, and let's say that's an impulse. Then we could say, all right, let's take our trend-based Fibonacci extinction and let's look for our wave 3 target. It's going to be the 1.618 or higher. So you would be breaking back up into this previous range point of control, right? Let's get rid of the small range. It's right next to your previous range point of control in here. You would want to break through this entire purple box with momentum, continuing to the upside with momentum. Now, it looks pretty good on the daily level as well, but I would be very careful, guys. Actually, I'm going to set an alert on this high because if we get the SFP of that high, I will take the short trade there. If I'm not asleep and I can catch it, I will look for that short trade there. And overall, you would be looking at taking out the low. Or I would at least, because we did break market structure bullishly, and if you take out that range high, you're breaking market structure bullishly on the weekly time frame, I would at least look to the golden pocket. So we would pull a fib from the low to wherever the high is, and I would look around the golden pocket. And of course, you would want to put that on log scale. So value area low. You know, so if we SFP, I'll take the short and I'll look to take 75% profit at the golden pocket value area low. And I'll leave 25% open to take that low. Lower time frames. Let's go to the 2-hour time frame. No real bear divs here, guys. No real bear divs on the 2-hour. Let's see if we get, also, I want to throw a box up here because this is also going to be your box within your box, right? Your daily and your 1.236. Let's go to our 8-hour. 8 hours, really important to look at money flow. Okay, money flow is coming out on the 8-hour on Market Cipher. NAMI, it's quicker, so it's showing the more recent move up. Money flow is coming up. Little bit of ambiguity here, but look at this, guys. The stochastic RSI and RSI are pegged out, coming together in your oversold region. When that happens, you generally see some sort of pullback, right? Come together, pegged out in your oversold region, major high, you get the big pullback. Like, you have to be careful here, guys. We are seeing signs that it could be a high in here. But low time frame, remember we were just on the 5-minute, 15-minute. This looks sort of like a bull flag. So you might continue up here. Boom, boom, and then continue up to your daily level. So I will also set an alert on the daily because the daily does look like we could get that short, and I'm going to put short if divs. Let's see here. Well, let's just go short. I will let you guys know if I take either one of these trades in the Telegram. (15-minute), no bear. Yeah, you did see some bear divs. So between this high and this high, bear divs, bear divs. If we flip this 1-to-1 right now, then you are very likely to continue up there. So let's actually look at this. Let's see if we can't get a scalp right here, guys. Now, this is going to be a very aggressive long trade. If you're going to long this right now, your stop is going to go below that local low, and you're going to be targeting that high at 457. You have a decent risk to reward ratio there. It's very risky with the bear divs that we're seeing. Let's go to the 5-minute. Very risky here, guys, to take that. But if you flip this to support, you would expect to work your way up here locally for the trend to continue. And we technically have the impulse, right, from this low, because look at this was a 3-wave corrective move, making a higher low, excuse me. So now you have all of this after that. All of this is, 1, 2, 1, 2, you get your big third wave, or you could even look at it from this low. That's your bigger 1-2s, 1, 2, 1, 2, 1, 2. You're in your third. So now we might be seeing the 4s starting. Let me just get to the 15-minute here. It looks super nice. Like this looks super nice in here for more upside, right? An impulse in here. Let's pull the targets for our wave 4 correction. Okay, if VWAP, guys, that VWAP around the 382, if this continues to bleed down here, that VWAP 382 could be nice to enter along to take out the highs. So you would enter after you start bouncing from the VWAP and the 382. You'd enter after you see a little bit of a bounce. The stop would go below wherever that is. You'd be targeting just taking out those highs. And that's almost a 7-to-1 risk to reward ratio on that trade. So it depends. You have two kind of scalp long opportunities here. If you're more aggressive right now, you could look at this first trade, this one. They're both about the same, 6.85, 6.878, right? They're both about the same risk to reward ratio. It depends on what you want to do here, For me, the 5-minute time frame looks a little bit sketchy. What did I do? It looks a little bit sketchy to be taking it, but you do have 5-minute bull divs. Lower lows in the price action, higher lows in the momentum waves, higher lows in the momentum waves. I mean, it looks like you could see the breakup here. I mean, what the heck, guys? Let's see here. Let me just do this. All right, we have a 0.61. So you got to, I don't want to calculate mine for you guys here. Let's see. I'm going to wait just a couple more candles to see if this does start to roll over, or I don't want this to blow out, this momentum wave to blow out here, but it is looking somewhat decent for a long trade. We also can throw on that channel. So you'll go from the high to that lower high and then throw it on that first low, because you might continue to chop in this channel until you get down to the 382. If we can really get a scalp here, if we can touch that again and then bounce without taking out that local low, man, that's going to be a good trade. That's going to be a 13-to-1 risk to reward ratio there. So I'll give you an example here, guys. Let's say you have that $1,000 account. We're going to risk 1% on this scalp trade. So we're risking $10. Now you got to calculate yours just take 1% of whatever your portfolio size is. If you got a $5,000 portfolio, it's going to be $50. You know, just take 1% of whatever your portfolio is. That's what you're risking per trade, right? On this trade in particular, I would say you're risking that, right? So let's say we're going to take this trade right now. $10 divided by, and you're going to move the decimal over to 0.0661, 0.00661. We can risk $1,512. So you might have to use 2x leverage, but if you take this right now, it's a 6-to-1 risk to reward ratio to come up, and I would at least take 50% profit at the 457 highs. So that, guys, I'm not a financial advisor. I don't give financial advice, and this isn't financial advice, but this is a possible scalp opportunity you could be looking at right now because the 1-to-1 is here, and it looks like we're trying to flip it to support. If we reject from the top of the channel again, you might see the breakdown. You might lose that trade. But it's there. It's available. And then otherwise, I'll set an alert on the 382. And if we get that move down into the 382, I'll look, we can talk about that in the Telegram because it probably won't be during the stream, about potentially taking along from the 382 to get up to break your initial highs and then your 457 highs. Near protocol, we can look at Near. Wow, Near's pumping a little bit too. All right, wow, so Near might not make it down to that golden pocket. But remember, on Near protocol, we had the 3-wave corrective move into your lower high golden pocket, and then we broke the range down. So we had a sideways range in here. Let me pull that volume profile. Sideways range right in here. It broke down. And then we back tested the value area low. And remember, that was last week. This was a 3-wave corrective move on low time frames. A little 3-wave corrective move to back test value area low. You reject, so you come all the way down. I did tell you guys last week we would probably see a bounce from this daily level. Let me get rid of this naked daily. It's no longer a thing. So we are seeing a bounce from the daily level or around the daily level. Let's see. 1, 2, 3, 4. Okay, so what I want to do is within the third wave, you can see this bigger impulse to the downside. It still might bring us down to 138.4, but we're inside the third wave. We're inside this third wave, and inside the third wave, we could be looking at a 1, 2, 1, 2, because you have overlap between the highs and lows, overlap between the highs and the lows there. And then this is your 3, so now we can pull our golden pocket, or our wave 4 targets. All right, these are your wave 4 targets. You want to reject, if you're going to see a rejection on Near, you want to reject in this zone and then make 2 more 4-5s. So we're looking at it like this. 1, 2, 1, 2. Here's your 3, 4, 5, 4, 5. And then you might get that third wave ending, just like I said, right into your 150 level. Get a larger wave 4 bounce before seeing a move down to 138. Now, if Near can hit the golden pocket of 174.8, even the 618 of it, it's going to invalidate this as an impulse to the downside. And then we can start looking at more bullish scenarios on Near protocol. I want Near protocol to go up. I was so pissed off that we didn't take out these 211.6 highs. Not pissed off, disappointed. I wanted to short that. Short triple highs there. I really wanted to get in on that short, but it didn't happen. Yeah, we're bouncing right around your equilibrium, your 0.5 and your daily level. We expected some sort of small bounce in here. So let's see if we get that rejection in this general area. Now let's zoom in on this. And we're breaking market structure bullishly, guys, by taking out this lower high and this lower high. We're breaking market structure bullishly. But I also want to look at naked daily points of control in here. Nothing until we get up here. But we do have a fresh naked daily right next to your value area low. So I'm going to mark that out because that is going to be important for us now. $184 to like 183 is going to be an important local resistance. And you even have the liquidity above, right? So liquidity above down to value area low. Yeah, man, Odyssey, I took profit on my near. I was in a long position on near, and I took profit at 308, but let me show you. And you guys can go back in the Telegram and watch. I longed, I added to the long position here, right in that box, and I took profit as soon as we hit the 308. And the reason why is because it was your previous range value area high and a weekly level. It was a previous range value area high, a fresh weekly level. And I was looking for this impulse from, this was a corrective move in here, right? Running flat correction. And then from here, you have a 1, 2, 3, 4, 5, you know, boom, finish that. Or actually, I think I had that drawn out a little bit differently, but based on the Elliott waves, we were looking for a potential major rejection from this zone. The important thing with Near Protocol right now, guys, is to get back inside this volume profile at 183 to 184. If you reject in this small zone right here, you're going to make new lows. You're going to hit 150. And by the way, 150, I'm expecting some sort of reaction from 150 because it's your one-to-one trend-based Fibonacci extinction. It's your naked daily point of control and a weekly. So I'm going to set an alert there, and I'm at least looking for a scalp long off 150. I can get rid of this daily now because we tapped it. I'm going to clean this chart up just a little bit. So let's see if we get the continuation down inside this third wave. If we reject in this zone. You're not really seeing bear divs right now. Okay, Flo, Aaron, thank you for the comment, man. Thanks, bro, for this nice TA. Absolutely, Flo, Aaron, thank you for the kind comment, man. Yeah, sorry, no, stop saying super nice for upward if I took a short. I'm sorry, bro. Okay, yeah, only BTC's doing the chop, right? BTC's the boring asset to trade right now. Actually, you know what I want to do real quick here, guys, is I want to look at the Bitcoin dominance chart because it looks like, okay, wow, Bitcoin dominance is going up, but altcoins are pumping, it seems like, more than Bitcoin. Let's get rid of this now. That's no longer important. So depending on what happens here, guys, we had a very aggressive move down here. 1, 2, 3, and I was looking for a 4 and then a 5 to finish an impulse here. But if we start hitting this golden pocket, if we hit this golden pocket at 59.68, it pretty much confirms that this was a corrective move. That means you would be taking out that high eventually. Even though it's a very aggressive corrective move, it is still more likely to be a corrective move in the overall range. I want to just look at one thing inside here real quick because we could be looking at this as an A, oops, ABC. Oh, wow. Your golden pockets right there. So what the unfortunate thing is, if you see an ABC here, ABC, you do have some pretty important resistance right at that golden pocket. but it would invalidate at least this being an impulse. 1, 2, 3, 4, 5. You wouldn't be necessarily looking for that. In that case, you would have to say 3-wave corrective move, another 3-wave corrective move, and then you would be looking for a 3-wave corrective move to take out this low in here. This could start to become a contracting diagonal as well. So in the bullish case scenario, guys, this is going to become a contracting diagonal. Let's pull that channel. So go from the lows. I keep screwing that up. All right. Go from the lows to that higher low up to the first high. Okay. So in a contracting diagonal, it's a motive wave, but you're going to see overlap between your highs of wave 1 and your lows of wave 4. As long as you don't touch the top until, or excuse me, as long as you don't touch the bottom of the channel, because you want this to be contracting 1, 2, 3, 4, and then 5. This 5 could just bring you up to the top of the channel. But if this is going to turn out to be a contracting diagonal, then it's a motive wave. Even if you get a pullback, you're looking for more upside. The bearish scenario is that the 3-wave corrective move is done, and that this is going to do 1, 2, 3, 4, 5 to take out this low. Okay, yeah, we can look at Filecoin. Piet, film alter. Absolutely. Let's see. Well, here's the thing. I mean, it's just continuing to dump to the downside, but you are starting to see some sort of exhaustion come in here. You had daily bull divs in here. Actually, no, excuse me, you didn't have daily bull divs, but you are now seeing bull divs from this low to the new low. You are seeing bull divs in here. Money flow is starting to bottom out as well. But the main thing you need to pay attention to right now on Filecoin is this sideways range right here. It's a, maybe a month or two. Actually, see how we had our 1.618 here and we bounced and then we made a corrective move up and we didn't hit the golden pocket. So we were looking for a 5th wave to the downside. So this could be the end of it. Like this range in here could be the end of it. On Filecoin, on higher time frames, you could be looking at accumulation in here as well. Like this is all a tap 1. This range would be a tap 2. And if this range breaks to the upside, even if it doesn't take out the highs, you would be looking for a tap 3 in here. And then hopefully you would see expansion to the upside. You want to form a larger sideways range in here of accumulation. And the reason why we're looking for accumulation is because look at right here, you broke market structure bullishly by taking out this these lower highs in here. You broke market structure bullishly. But let's zoom in and let's pay attention to what's relevant right now. So we want to look at this sideways range. You're backtesting your value area low right now. Depending on what happens on this backtest, you might continue down. I won't even try to count this in LA waves because this looks ugly as crap. Let's see. Did we take out the highs? Yeah. So it's from this high. This is the high. You would have to say like what? 1, 2, 1, 2, 1, 2. I mean, this is ridiculous looking here. What I would look at is the channel. If I can get it. There's your channel. You had a breakdown. You're now back inside of it. Actually, let me throw it to this guy right here. Yeah, nice little channel in here. You're at the midline. You're at your value area low. If you reject here, you're going to make new lows. And you're probably going to come down to this 1.236 at 62 cents. But if you get back inside this volume profile, you have a very high chance of moving up to the value area high. And honestly, look at, once again, liquidity, 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 liquidity. It could sweep it all very quickly. all the way up to the top. We don't really see bear divs right now on the 2-hour chart. And your money flow is looking pretty good on NAMI. Look at crossing into the green here. No bear divs on the 1 hour either. Yeah, and 4 hour had some nice bull divs. Lower lows here, higher lows here. Bull divs on money flow. I mean, this looks like it could break up back inside the volume profile, guys. You're at resistance right now, and even if you pull a local golden pocket, very, very local golden pocket, I guess you're a little bit above it, but this is the zone for a pullback. So obviously you can't, I mean, you can if you want to. I'm not a financial advisor. I don't give financial advice, but I wouldn't be longing right here. With the channel midline, the value area low, and the golden pocket in this zone, I wouldn't be longing. But if you break back up inside of it, you can look for the back test of the value area low. If you do something like this, get up inside of it, on that back test, you could look to long it to bring it up to the POC and even the top of the channel. And like, you know, that still could be a good scalp, right? Say, once it back tests, once it starts bouncing, you long, you're going to put your stop below wherever that wick low went, and you're targeting the POC, 10-to-1 risk to reward ratio, depending on how soon you get in. But it hasn't broken back into it yet. So obviously we're not taking that trade until we see a flip to support. If anything, man, I wish we had some nicer bear divs here because I would short this. It's relatively low liquidity. You see these huge wicks on both sides and big wicks in here. It's a low liquidity asset. So it's going to be more dangerous to trade because you can get wicked out. Save maybe 5% for DGen. Not waiting. Sorry. No, it's awesome, man. Okay, 50% in BTC, 20-30% in ETH, the rest in top 20 alts. Yeah, I like some of the top alts, Crypto Clan World. I like Hyperliquid. I like Solana. I like Chainlink. Let's say you are a new crypto investor. How would you invest like 5K for the next bull run? I'm trying to get people that work for me to start investing instead of wasting extra money. Well, I actually think that Crypto Clan World gave you a pretty good breakdown of a portfolio. So I would put probably 40 to 50% into Bitcoin at those lows, right? Because Bitcoin historically performs in every bull market. And then I would probably, me personally, I probably wouldn't put 20 to 30% into ETH. I would probably put like 15 to 20% in ETH. And then the rest of it, I would break up into altcoins like, you know, maybe the big three altcoins, Solana, Chainlink, or some of the big new Hyperliquid. I would put probably 10% into each one of those. And then I would save, you know, 5 to 10% for DGen trading for higher risk. It doesn't mean you're leverage trading with it. It means you're looking at coins that have more growth, right? Growth opportunity. You know, like if you invested in Hyperliquid, it's new to this cycle. Hyperliquid did a whole lot. And actually, let's check out Hype real quick. So I would look at, you know, of course, that does take some looking at. Oh, man, we're so close to taking out that low. Guys, remember, we had an alert set here at 52.46, and I still think we can come down there. I really think we can come down there into the golden pocket, into the liquidity grab. I'm looking at taking along if we come down there. And this, let's hope this chops and continues to chop in here. One more low right into that sucker. You got some nice bull divs in here. Yeah, you look at this. You have such nice bull divs coming down. we need to take out that low, guys. Man, that would be super nice. Now, if we get back inside the value area low, if we get back above 50, let's just say 57, 56.90, 56.91, 57, yeah, pretty much 57. If you get back above 57, you could see a move all the way up to, 68.9. And what we're looking at is A, B, C, because this is your C between the 1-to-1 and the 1.236. If you grab that liquidity from the low, you might continue all the way up to take out those range highs. If this keeps going through the golden pocket, then it's likely to be a wave 3, and you're likely going to see a bounce, a correction, and a move down to 44. Because remember, I talked about this on Tuesday, I think. 44 is important because it's your previous range value area high and a naked weekly point of control. So there's two major scenarios, A, B, C, and upwards, but you would really want to grab that liquidity first, or 1, 2, 3, 4, 5 downwards. And I know some people are probably going to say, oh, you just said it can go up or down. You're not telling me anything. It's not about if it goes up or down, guys. It's about where to take the opportunity. The mindset as a trader is I don't need to know if it's going up or down. I need to know where those opportunities are in the up or down. And that way I can take the trade if I see confirmation at that opportunity level. So for me, hype, guys, I mean, we are bouncing right now, seeing a decent bounce before grabbing that liquidity. But I'm really looking at this liquidity. So first off, we had this big push up. This looks impulsive clearly right here, all the way up. If you pull a golden pocket from those lows to the highs, our golden pocket was not hit. Look at that. It was barely front run. Barely front run in this low here. Yeah, technically it could have been hit on some other exchanges. It was barely front run. Let me see. Maybe I have to also shift that. Oh, that's super close. All right, hold on. If it's more than 100% pump to the upside, you generally do want to use the log fib. It's like right there pretty much, guys. So it's a bit, man, it's a bit tough here because it's right under 100%. So your non-log golden pocket is obviously going to be right into that liquidity level. But your log golden pocket, it's going to be a little bit lower. It's going to be at 49.5 to 48.5. Either way, I'm going to be looking for long off this SFP if we get it. Alerts are set. We're setting up nicely as far as the bull divs go too. It's also your 1.236 target in there. Now for shorts, I would probably be looking at if we see a bounce before the liquidity grab. And remember, I talk about this a lot on the channel too, guys. When you see a front run of a liquidity level and then you see a decent bounce, it's more likely now the next time you're going to bust through that liquidity and not see a proper SFP. So this is actually a bad thing we're seeing for Hyperliquid right now. To see this little bounce here before grabbing liquidity is not the best thing. And really, it's because it broke local market structure by taking out this lower high in here. It broke market structure bullishly. And so it's not the best thing that we're seeing this by taking out this lower high. It might just bust straight through it and not see the SFP. But if we do get the SFP, even coming down to 51.26 and then get back above, I'm going to take the long position. Yeah, that entry is a good entry, man. Amen, Yachi. Amina Yachi. Sorry if I butchered the name, dude. I told them I put 5K in a trading account with BYDFI. Then we work as a team to make money just to get them. Okay, that's a great idea to get them involved and to get them interested, right? So what you could do then, if you put 5K into the BYDFI account, what I would start out trading is Bitcoin probably only at first, or unless you're doing spot. If you're doing spot, yes, you could do the, 40 to 50% Bitcoin, 10% into some of the big alts, 20% into Ethereum. But if you're doing derivatives trading with them, I wouldn't let them use leverage improperly. Teach them risk management, obviously. But maybe for now, if they're very new to it, stick to spot. And like, you can still trade spot, right? Like, let's say, for instance, on Hype, we come down, we SFP this, you could buy some on spot, and then you could take profit at your lower high golden pocket, wherever that's going to be, that you would want to shift to based off log. Okay, it is. Yeah. Depending on if it's a 30% move down or not. But yeah, you can use technical analysis to spot trade as well. That's pretty much 30% too. Dang it. Right on that cusp. Daily time frame for Hype. Market Cipher is not showing bull divs, and the money flow looks pretty bad here. This is concerning to me. Now, NAMI, on the other hand, you are seeing multiple drives of bull div. A drive here, and now a new drive here. Money flow is starting to curve up. Yeah, so you can see the drives of bull div in here on NAMI. But it would be nicer if we could get one more drop even in the next, let's see, today's Thursday. So maybe Monday. It would be nice if Monday we could take out that low, or tomorrow, but not over the weekend. Yeah, and let's see, inside of this here, you could say a wave 1, wave 2, 3, 4, and maybe you're ending this with a contracting diagonal 1, 2, 3, 4, 5. So you can count. You have wave 1, wave 2, wave 3, wave 4, and then within the fifth wave could end as that contracting diagonal, because this does look like a contracting diagonal in here, right? Kind of that contracting diagonal in there. Not looking forward to the weekend. Everything is so dead. Yeah, it sure has been limitless. I probably could just YOLO long it with stop loss below 52.75. Well, I would probably put my stop loss below the 51.26, below the golden pocket. But let's say you're going to do that, right? Let's say you're just going to YOLO right now, long. You're going to put your stop loss below the golden pocket. And you're obviously going to be looking at taking out the highs. Even right now, coming up to the golden pocket, you're at a 2.5 to 1 risk to reward ratio. Now, to me, that is somewhat acceptable, right? That is somewhat acceptable already, a 2.5. I would prefer a 3, but 2.5 is somewhat acceptable. But if you're looking at taking out the highs, that's a 5 to 1 risk to reward ratio. So it all depends on your timeline. That trade would probably be open for a couple months, or at least a month. But the big thing is you're below the value area low, guys, of this upper range. You can see a very clear upper range in here. So you're below the value area low. If you're below the value area low and you start closing daily candles below the value area low, you're very, very likely to grab the liquidity of the range low. That's why I wouldn't be so bullish quite yet. And maybe, we don't see that collapse. I hope we don't see a collapse. Me too. It doesn't look good. The Elliott, this move here looks like more of a corrective move. That's the only thing that we might see a collapse. Now, I hope we don't. I hope we can break out of this thing and continue up here. I'm still in that long position from 58.2, by the way, guys. I'm still in it. I've taken a majority of profit on it already, but I'm still in that long position. God, Bitcoin, guys, all these altcoins look exciting. Bitcoin's doing nothing. Consolidating in the little triangle thing. I want them to focus on spot for long term. Otherwise, all of us look at charts the whole day and not make sales. Yeah, okay. No. Very, very good thinking there, man. Yes. Research, then buy and forget. Now, you can still use spot, like research those good spot buy levels. Actually, on Ethereum, I picked up some Ethereum at 1500, 1560 about a month or so ago. I had limit alerts set, heavy spot buys in here. I had alerts set to buy at 1560, and I bought some at 1560. Now, I already have limit TP set at 2042 for that, for some of what I bought down here. But like my spot buy on this was waiting for a long time. Actually, since like February. But the reason why I was buying some spot down there is because it's our 5-year long range value area or point of control. It's your 5-year long range point of control. It's now 5 years. You can see that point of control goes all the way back to May of 2021. So we're in past May of 2026. So it's at least 5 years. Come down to that macro point of control. Now I'm watching Ethereum as well because this first move up was a 3-wave corrective move. I am expecting new lows. So I plan everything that I bought at 1560, I will sell before, if we start to break down at all. And we probably, if we lose this pitchfork at 1700-ish, I'll probably sell it. It's not that much, guys. It's not like I bought 100 Ethereum or anything. Still rejecting from that very local, very, very local golden pocket after rejecting from the larger golden pocket. But I would like to see Ethereum come up to our purple box up here. 5 years ago in Bitcoin high wasn't even close to now. Yep. 1560 spot buy for ETH. Is pretty damn good if you think about the previous bear market low was less than 50% drop level from that. Yeah, you're right, man. And that's why Crypto Clan World, I've been eyeing that 1500, 1560 zone for a long time on Ethereum. I think that, well, obviously we're in a bear market, right, guys? Overall, we're in a bear market. And according to the 4-year cycle, which hasn't been wrong yet, it hasn't been disproven yet, we do have more downside. But let me clean up this chart just a second here. I do think that the lows could be close to being in for the bear market. Maybe not in exactly, but they could be close. The reason why I'm saying that is obviously we're at very, very, very crucial support. It's your anchored VWAP from the bear market lows, right? All the way from the bear market lows, it's your anchored VWAP. That is your most important volume-based trend support of the entire bull market. Now, let's turn on our bearish pitchfork. We have a bearish pitchfork that I've been following this whole bear market. We touched the bottom of the bearish pitchfork, right? After rejecting from the midline where we were looking for massive shorts. We were looking for swing shorts up here to take out 60K. Okay, we finally came down and hit the bottom of the pitchfork. We also have another pitchfork. Not that one. Right there. It's from your last bear market. We're hitting the midline of the pitchfork in there as well. It's a little bit of an unconventional pitchfork, but you can see how well it's respected. Let me turn off our bearish one real quick. Rejection, rejection, distribution, rejection, bounce, rejection, you know, coming down to the midline. So really nicely respected pitchfork in here. Very important midline support. So you have your bearish pitchfork, your bullish pitchfork, and then if we even go to our Binance chart, and this, because this is a multi-cycle channel, you're looking on high time frames like the weekly. Look at where we came down to after rejecting to the exact dollar from the upper band, the lower band, sorry. We came down to the bottom. So like this high to mid 50s is super important. And if we lose that you could drop down to the low 40s to high 30s. Yeah, exactly. A lot of people are expecting that date. In some ways, it could be a self-fulfilling prophecy, though, right? Because people are saying, I'm not going to buy till October. Well, maybe they're not going to buy till October now. I'm looking for, if we get another new low, I'm looking at like $56,000, right? Because that's your value area low of this 2-year long range. 2-3 year long range. Value area low is just barely front run. It's interesting that we're trying to hold above the POC. If we can hold above this POC, I would be expecting not only new highs above 67.2, but I would be looking for the mid to high 70s. And if I look on the Coinbase chart, I can show you that. You have 73 to 74, and then you have 77 to 78. Weekly bull divs on the chart. The concerning part is when you look at the structure of this move up from 57.7, it does not look the best. This structure in here just does not look the best. If it was going to be impulsive, and this is my big concern right now, if this was going to be, clearly this is an impulse, right? So you have an impulse, you have a flat correction in here, and then you needed this to do 1, 2, 3, 4, 5. You wanted this to continue, and you wanted to break these highs and actually continue above those highs. But we're rejecting to the exact dollar from the anchored VWAP, and now we're starting to, we've already broken market structure by taking out some lower highs, higher lows, excuse me. And so now we could look at an A wave, kind of a flat and a B, and then a C wave in here, right? And if that's the case, then you're looking for an impulse down to take out that low. And the impulse we would have to look at right now is a double 1, 2, a 1, 2, 1, 2, and then you would expect this to break down pretty aggressively, and then you would start getting your 4 5s. And the 3, because we have all of this liquidity in here, if we see a 3 breakdown, I think it's at least going to go to 61K, but it could go all the way down to 57. And then you get your 4 5s down to 56, right? You get those last 4 5s into your value area low. Something coming into $56,000. Let's hope that's not the case, guys. Let's just hope crypto pumps like crazy. All right, guys. I just saw the time here. I do got to get going. Thank you so much. Okay, wait. What do you think about my girlfriend, Ada? I'll check Ada really, really quickly, but I do got to get going soon. So please do hit the like button if you got any sort of insight into the market from this live stream. Also, guys, I'll be streaming tomorrow at 3 p.m. Eastern Standard Time. And remember, if you want to get my alerts and my analysis in between the videos and the live streams, you just have to join BYDFI using my affiliate link in the description. Once you've done that, you make a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses in here. But once you've made the minimum deposit after signing up with the affiliate link, you go into the Telegram link in the description of this channel and you type in /verify in your user ID and it will get you into the Telegram. We did set a lot of alerts on some altcoins today. We set a lot of alerts on Bitcoin as well. So I will do my best to keep you guys updated on my analysis and my thinking on that. And then tomorrow we're going to also look at some more scalping. We need to start getting some trades in on the channel, guys. So I think big moves are coming soon for Bitcoin. I think big moves are coming soon for the crypto market. We've been consolidating and chopping for a bit. All right, ADA, we are in a small range. You can see on the daily time frame this small sideways range. One thing I don't like about ADA as well, from the low, we do have, once again, it looks like a 3-wave corrective move. Okay. Now we're looking at another 3-wave corrective move here. Could we see one more 3-wave corrective move to take out that high? It would still take out that high, and then you would have a WXY, and it might come up to 21 to 23 cents. So let's pull our trend-based Fibonacci extinction. Yeah, 1-to-1 to the 1.236. You can see that 1.236 is right at your purple box, right? And I could just extend this more. Your purple box is resistance. It's your previous lows into a golden pocket and also into your 1.236 fib extinction. Now, even more prudently and importantly is probably the SFP of the range highs into your 1-to-1. If you get that, that's where it could get really bad. So actually, I'm going to set an alert on that because I like the way that looks. I like the look of a short from this resistance in here. But you bounced from your value area low on Tuesday. You broke above your POC today. If you close the daily level today above the POC, you're likely to come up to value area high, which you've almost done today, but you haven't quite done it yet. So let's go to the 2-hour chart. Bounce on Tuesday from value area low. Very, very nice bounce. You're breaking above the POC. Even if we could do something like this where we come down to VWAP and then continue up to value area high. And you could look for scalps there, guys. You could look for scalps off of VWAP, but I would be careful with that. Nami is showing some bear divs. Yeah, bear divs as well on Nami 4-hour. And you're in the golden pocket zone. You were trying to flip it, but you're in the zone. This could be a rejection zone. What I do like here is this 3-wave move, right? And it's part of a bigger 3-wave move. And this is a 3-wave move here. So we have a bunch of, and when you see a series of 3-wave moves like this, it's just a more complex correction. And it generally ends up being a sideways correction. And that's what you get your sideways range. On the weekly time frame, if I remember, ADA looks really good on the weekly time frame. Actually, no, ADA wasn't the one. We were looking at one coin that looked really good on the weekly. But Nami has bull divs between this low and this low. Lots of bull divs in here, right? You had the local bull divs. Now you have the regional bull div here. Money flow is still coming out though, and we have to be careful with that. Because money flow will always, not always, a majority of the time overpower a single drive of bull divs. Yeah, and you're rejecting from your golden pocket 786 zone right now. Let's see. 1, 2, 1, 2, 3, 4. Yeah, and there is a way to count this as an impulse in here. So if you have an impulse, you have a correction. Well, actually, it's been invalidated because this is not another impulse. Four-hour chart has bear divs on Nami. Even the 8-hour chart, look at 1, 2, 3. You have some bear divs in here on Nami as well. The important thing is just watch the close. Is the close going to be above or below 16.6? If it's above, then you have likelihood to continue up to value area high. And honestly, probably take out this liquidity. Okay, let me check Bitcoin for 1 second, and then I got to get going. Nothing, guys. Bitcoin is just being boring. Remember, if we get the SFP of our local low into the VWAP, I'll look for that scalp long position. We're looking at a different range. We were looking at a smaller range that yeah, and man, we're right around this anchored VWAP from the 67K highs. I'm just worried that we're going to see the chop like this where everyone gets bullish and then it just makes new lows again. Chop like this, everyone's getting bullish and it's going to make new lows again. I'm a little bit concerned about that. So that's it for today, guys. Thank you to all the mods. I appreciate y'all. Guys, please do hit the like button if you like today's live stream, or if you hit or if you got any sort of insight into the market from this live stream. Wow, coin is down 7%, missing earnings. Wow. Well, crypto's been crap the last quarter. It's been crap all year, actually, so I get it, but that sucks. Thank you, guys. I appreciate the kind comments. Thank you, Alex, for the kind comment there. Tomorrow, guys, 3 p.m. Eastern Standard Time, we're gonna get into some altcoin scalping. Maybe it's altcoins, maybe it's Bitcoin, but we're really gonna try to catch some trades tomorrow.